105 countries. This has been a pretty steep increase, as we can see, from May 2020. Here's my first question. How serious are these 105 countries, right? Like, I think some of these are just sort of countries that are saying, like, yeah, you know, FOMO, we'll just look into this because everyone else is looking into it. I mean, of these 105 countries, roughly what percentage do you think will actually come out with a central bank digital currency?
Yeah, this is a key question we get asked by Treasury and finance ministries actually around the world. How serious are these countries? A country can issue a press release saying they're investigating CBDC or exploring CBDC. So what we did in this new report was actually show that of the 105, 50 are what we would describe as serious, meaning they're in development, pilot, or launch beyond the research stage. Central banks, as we all know, are pretty cautious institutions. So once they move beyond research into a development and certainly a pilot or launch stage, that means they're very likely to actually go through with this. And it's not just small and emerging market economies, and it's not just China either. 16 of the G20 economies are in development or pilot or about to be launch stage, and only the US, the UK, and Mexico are still in the research stage, and Argentina is the one outlier that's nowhere in the CBDC progress. So all to say that this is very serious. This is not just limited to one type of economy, and many economies are very far along on the CBDC process.
So it's interesting, you know, you guys sort of use the language that the U.S. is one of the countries that's the most behind. And there's definitely a split in opinion on that. Like, there's some people that are like, okay, U.S., get your act together. You know, you're really behind. You know, China's going to take over the space. And then there's others that don't really say the U.S. is behind. They say the U.S. is just more deliberative. They're just being more cautious. They're concerned about privacy controls. I'm curious as sort of where you fit on that spectrum. Like, do you think the U.S. is just sort of dragging its feet? Or do you think the U.S. is just taking the proper step-by-step, be careful, don't give into FOMO approach?
Well, I tilt a little more towards the dragging your feet side. And I think it's pretty important. If you look at what Vice Chair Brainerd said to House Financial Services, by the way, her first testimony as Vice Chair was on CBDCs. She didn't have to testify on that topic. So I thought that was an important signal. She mentioned the European Central Bank, the ECB, far more than she mentioned e-CNY, China's CBDC. And I think that shows from a Fed perspective, they actually now see that these large economies in the West, the Eurozone, the Bank of England even, they're the ones moving quickly. And they have moved more slowly because of privacy concerns. And that's a very legitimate concern. But now we see competitors from an economic space moving and finding solutions on those privacy answers. And the US is still missing from the table a little bit. And when we talk to central bankers around the world, the one thing I hear more than any other is, where is the US model? Where is the US in standard setting? Because if the US and the Federal Reserve said, here are the policy priorities and the technological priorities we believe a CBDC should have, it would be enormously influential all around the world. I think that's missing right now. So I lean a little more towards that the U.S. could be doing more than the U.S. is being appropriately cautious.
You know, to that end, we had former CFTC Chair Chris Giancarlo on the show yesterday, and I wanted you to have a listen to what he had to say about this topic.
While China's current stage at 250 million wallets may be seen as the world's largest pilot project, within 10 years, you could see Chinese CBDC technology and infrastructure in place in as much as a third of the globe. And I think that is truly something that the United States and Europe and Britain and the free economies, the free societies need to take notice of.
CBDC infrastructure taking up 1/3 of the globe. Agree? Disagree?
Well, I think Chris is on to something, but I think it's important to distinguish between retail and wholesale CBDC. So our tracker looks at both, and it's the retail, of course, that gets a lot of attention. And China's retail digital currency, e-CNY, takes up a lot of headlines, both in Beijing, but also in Washington. But since Russia's invasion of Ukraine, what we notice is actually an increase in interest in wholesale, bank-to-bank CBDC. And I think that's actually what Chris is getting at, because if you think that countries are going to look to alternatives to the current financial system, alternatives around SWIFT, alternatives to bank dollar transactions, wholesale CBDC actually opens up some avenues for them. And I think that's why you're seeing the increase. So will China make CBDC infrastructure part of Belt and Road lending? I think that's very possible. This is not a next year or 2 years, but over the next 5 years, you are very likely to see some of these countries that are interested in building CBDC going to China and saying, we need the infrastructure to do it. All the more reason the US and the G7 should be leading in this area and not following.
So there is an important nuance in what Chris said, and I think you just pointed that out, is that he says China's CBDC technology. He's not actually talking about China's CBDC. If I understand what he's saying correctly, he's sort of talking about countries that are using sort of like the same kind of technology for their own CBDC, as opposed to China's actual CBDC taking up that much room. I think that's what he meant. But I guess my question for you is on China's CBDC specifically, do you feel like the threat of this is, or if you, whatever the potential threat, whatever you call it, of this is overblown? Because, you know, it still is just a digital version of China's currency, which has certain restrictions in terms of convertibility. And I mean, do you think that this idea that China's CBDC is just going to sort of like spread throughout the world is just a little bit exaggerated?
Yes. I mean, the short answer is yes. So, you know, a digital renminbi has all the problems of a traditional renminbi in terms of capital controls, as you pointed out. The issue that we often miss in Washington is that China has a series of motivations for their CBDC. A lot of them are domestic and not international. And I think the domestic ones actually take higher priority than the international ones. The first domestic one, as we all know, is surveillance and the ability to see what citizens are doing in close to real time. The second one is a more benign version, and that's faster transmission of fiscal and monetary policy. That's why a lot of countries are interested in CBDC. So there are domestic use cases that they see for it, and this sort of international taking over the dollar, I think, is not on their agenda at all. I do think, however, to the previous point, this wholesale bank-to-bank exchange is something they're very interested in, because imagine China invasion of Taiwan, you see a sanctions package like you saw in Russia. They need alternatives to the SWIFT system, alternatives to current bank-to-bank structure. And so the one thing I would say about the technology front is it's true, they are providing the technology, not the CBDC. But these CBDCs, these 105 we track, no two are alike. This is a real interoperability problem. You have centralized ledgers, you have permission DLT systems, you have all different systems, and I'm not sure anyone has thought through how these are going to interact cross-border. China could say, yes, use our technology, but by the way, if you're looking for a streamlined CBDC model, we can help you there too.
So, Josh, how does this work within the EU? You have the ECB, of course, controlling monetary policy, but you have countries like France most recently basically taking steps to CBDCs. Well, what happens there? What control does a particular country have over not only just monetary? Obviously, it doesn't have as much control of monetary policy if it's in the Eurozone, but for its individual country. But what sort of things can it do? And does this even create I don't want to say an incentive, but makes it easier for potentially countries leaving the EU or at least the Eurozone in case there are issues such as Brexit or Grexit that was proposed a while ago? Yeah. Does that make it easier, harder? What happens?
So the ECB, the European Central Bank, has been very clear that they are pursuing a digital euro. They are actually, if you think of the big four central banks, the Fed, the Bank of Japan, the Bank of England, the ECB, the furthest along, and they have indicated they're going to deliver one by the middle of the decade. That's a pretty accelerated timeline. And they are the issuer for the 18 Eurozone countries now. Croatia is now part of the Eurozone. So they are the issuer, and they control the retail CBDC. And that's what's important to understand. So the ECB, Christine Lagarde, they will issue a digital euro by the middle of the decade, very likely, and that will be a retail central bank digital currency. But the wholesale central bank digital currency, the individual central banks, the Banque de France, the Bundesbank, can do more experimentation on that end. It will still be a digital euro. It will still be backed by the fiat, but the individual country central banks have far more leeway to experiment. It's one reason we encourage the New York Fed to actually do cross-border experiments with their partners in Banque de France and Bundesbank and others. So that wholesale retail distinction's really important when you get into the Eurozone.
Does it create a chance for them to ultimately split, though? Does it make such a thing easier? I mean, we didn't think it was. We haven't had a country leave the Eurozone just yet, but we did have a country leave the EC, the Euro, the European Union. So. Does this make it easier down the road for another exit?
Well, I think it's a little similar to the China issue where all your problems with your fiat can be transferred into your digital version, right? So it's just a digital representation of your fiat. If there are concerns countries have about being in the Eurozone from a more fundamental level, that won't necessarily change with the digital euro. But the one question the Europeans, the Americans, the Brits, the Japanese have to answer is the privacy challenge. We issued a new report of this from the Atlantic Council saying this isn't necessarily a trade-off between privacy and cybersecurity. That's why we've been slower in the G7 to do it. If the Europeans can answer that first, it's going to be a signal to the rest of the world on how to do this from a G7 advanced economy perspective.